Good morning from London. I'm Kriti Gupta alongside Mackenzie and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. Top U.S. and Russian officials due to start talking imminently in Saudi Arabia to discuss how to end the war in Ukraine, but without Kyiv and European leaders at the table. It's the countdown to the German election. Chancellor Olaf Scholz and conservative frontrunner Friedrich Merz effectively ruling out serving together in the same cabinet. Plus another batch of UK jobs data. We're going to break down the numbers shortly. Tom.
OK, let's get a check-in on your markets then. Fresh record highs in European stocks yesterday. On the defence story, European futures currently flat. US futures, though, putting to a slightly brighter session as the US comes back from the President's Day holiday of yesterday, pointing to gains currently on the S&P futures around 0.4%. The benchmark 10-year is currently yielding you 450. Yields up 3 basis points. Chris Wallace says he's comfortable with rates as they are, though he is open to additional cuts later this year, depending, of course, on how inflation evolves. 126 on the pound, down 0.1%. That's down to dollar strength largely. We'll see how the inflation data, or the jobs data, I should say, affects that. That is crossing the next couple of minutes. The inflation data in the UK is on Wednesday. The countdown to the opening trade starts right now.
Good Tuesday morning. Welcome, of course, to the opening trade. A lot going on, plenty of geopolitics. Talks kicking off, of course, in Saudi Arabia at the moment in terms of U.S. and Russia on the solution to potentially peace in Ukraine. But, however, Vladimir Zelensky and European leaders at the table. We're going to get there in a moment. At the moment, Lizzy, we are seeing some UK data across the wire.
We are seeing weekly earnings out of the UK coming in line with estimates. So 5.9% for the 3 months to December. That's a boost from the previous figure of 5.6%. You did see a slight miss when it comes to UK unemployment in the 3 months to December. So 4.4%. The estimate was for 4.5%. But it's still the same as the previous period. I would say this is pretty much in line with what was expected, so it's not likely to really move the dial for the Bank of England. You'd already seen at the February meeting the BOE revising upwards its fourth quarter forecast for pay growth. And so actually, when we've listened to Bank of England speakers of late, the focus seems to be on growth. We heard from Andrew Bailey yesterday. We'll have CPI numbers tomorrow, but I would say that this isn't going to do much to move the needle for the BOE, and you aren't really seeing much of a move in the pound off the back. Yeah, the pound at 126, a move just of 0.1% lower, but that's more of a dollar story, as you say. A very, very modest move in the pound on the back of this data, which, of course, you know, the context is that there's questionable how much clarity we get from this data, given the survey response. And as you were pointing out earlier, Lizzy, Catherine Mann going from Archhawk to Archdove is indicative maybe of where this BOE is starting to go and what it's looking through and what it's clinging on to in terms of whether or not this actually moves the dial. Yeah, it was really interesting to hear from Andrew Bailey in this interview, kind of expressing sympathy with Catherine Mann, but saying, you know, he didn't reach the same conclusion which she reached, which was to go for that jumbo cut, which really surprised the markets in that BOE decision. Yeah, it's a fascinating one because it almost feels like, and she's always, and I think you've said this as well, that she kind of uses herself as an activist as well. Does that format kind of change now that we're talking about more defense spending from the UK? We're talking about tariff impact as well. This island of stability that has been the UK's reputation, I want to say, in at least extra in the last year since Keir Starmer kind of took over. Does that actually continue? It's really interesting that you mentioned the defence spending point because, of course, we knew how fiscally constrained Rachel Reeves, the Chancellor, is. We already knew that the Treasury was looking at, in the worst-case scenario, 11% cuts to unprotected departments. But now our reporters find that that worst-case scenario could be the base-case scenario because of this pressure from Donald Trump for Europe to spend more on defence. It could be the political cover for austerity that they've been waiting for. 2.5% is the expected number that the UK is going to have to go for. Do they go above that, and do they move money then from other departments? What kind of role is the UK going to play in terms of providing these security guarantees? And Keir Starmer trying to get out on the front foot, suggesting that UK troops could be on the ground in Ukraine. Do they partner with France on that? Do they partner with Poland? And do they need that US security support as well? That relationship between the US and the UK, as the Chinese might say, is a bit like teeth and lips. Very, very close. Do we still maintain that even as the US pulls back on some of its support? That summit was taking place in Paris, of course. Yeah, absolutely. And we are getting a little bit of the readout here, which is kind of saying what we already knew, which is that the Europeans have known this problem for a while. They haven't really been able to address it. Where you are seeing a little bit of a change in tone is around that joint defense spending. And I think that's really crucial as well, because schisms are certainly showing up, not just between
Europe and the UK in terms of kind of boots on the ground and defense spending there. You're seeing schisms within continental Europe as well, Eastern Europe versus Western Europe. You're seeing it between the United States and Europe. And now, of course, you are, of course, seeing the United States and Russia have these talks in Saudi Arabia.
Yeah, Poland saying, Donald Tusk saying that, no, Poland cannot be sending troops to defend Ukraine. We can't even defend ourselves. We've got to focus on ourselves. I think as well, it's interesting to note the role that Macron is trying to play here as the leader of Europe, which Europe really needs. You know, Ukraine is conscious of the need for an envoy to sit at the table with Putin and Trump. There is not that person to do the bilateral conversations that Donald Trump so likes. And here you have Macron convening some of the European leaders in Paris and trying to play that role. I wonder if that's the kind of vibe you got off Macron when you were at the AI summit in Paris.
Well, look, his terms in 2027, he's got political stability at home, domestically, of course. Some would counter him and describe him as a lame duck president. So whether or not he can be the leader in this moment for Europe is a key question. Maybe that takes us to the German elections. But I also want to meditate a little bit on what Kriti was saying, because I think it's so important in terms of the divisions in Europe with countries like Hungary, and the fact that right now it's not just Russia playing into those divisions, it's the US as well. How does Germany contend with that? Because they've faced that pressure in terms of the AfD. They've pushed back on that. J.D. Vance essentially saying you should drop the firewall around the AfD. That brings us to the elections and how consequential they are in Germany on Sunday in terms of whether or not you get a leader out of Germany who will be that figurehead for Europe, whether it is Merz, what kind of coalition it shapes up to be. Talking of which, both Merz and Scholz, the Chancellor, of course, current Chancellor, have suggested they will not rule together. Our correspondents in Germany say that's not a big surprise, but what it does do is change the mathematics around the type of coalitions that could come out on the back of this election.
At a time when, of course, so many of the key parties and the fragmentation there really says the AfD is a no-go, does this change the calculus, to your point, around that as well? We're putting this in the context of that rehabilitation story of Russia, which, of course, European leaders at the moment are very against. I say Western European leaders are very, very much against. But it brings a question of if that is on the agenda, if the United States and these talks and this dialogue with Russia, that, by the way, has not happened in the last 3 years or so, does actually create some sort of thawing of relations of some sort in Russia. Is Germany the first country to fall to that in the context specifically of the energy dependency? Austria as well. You've just seen the Baltic nations come off the Russian electricity grid. Does this ultimately become an energy story that kicks off of Sunday's election?
It still is an energy story, isn't it? And how they react to that. Hungary, of course, will play and will expect, or at least will confirm, that they, or at least assume that they've played a pretty solid hand in this, in terms of keeping the relationships with Russia, keeping the conversation with Moscow. Yeah. And now, of course, the US alignment, meaning that Hungary is well positioned. What it means for energy going forward for Germany, does it start to see those pipelines put back on the table? Certainly Merz is not building out an expectation that will happen. He's talking about maybe bringing some nuclear power back for Germany and rebuilding and making sure they have the infrastructure around renewables, not making any assumptions about Russian gas back in the German markets.
Yeah, a very tricky situation in terms of balancing the energy story, the defense story, and, of course, that leadership that Germany is trying to show. As we talk about all of those dynamics, China, of course, weighing in here, saying they're welcoming talks to end the Ukrainian crisis, saying that they hope all the stakeholders participate in talks in due course, of course, referencing Vladimir Zelensky and some of those European leaders, and say that they think that dialogue, negotiation is the only way out of crisis. Macron not the only one trying to play diplomat today. Let's tell you what else we've got coming up on the show. Elizabeth Martin's at HSBC, the senior UK economist. There's going to walk us through some of the data Lizzy was just talking about and what the reaction function looks like for the BOE. Plus, of course, what does all this outperformance in Europe actually mean? Sharon Bell out of Goldman Sachs, a senior European equity strategist there, certainly has some views, and specifically on the defense sector in the rally there. We'll get her thoughts. And then, of course, as Tom was saying, it is all about the German election. We're just a few days away. Guntram Wolff from Bruegel, a senior fellow there, will walk us through his take.
Well, we've got a busy day coming up in terms of eco data and central bank speak, so let's take you through that as well. We have at 9 a.m. London time the ECB's Robert Holtzman speaking in Vienna. He, of course, a hawk on the Governing Council. Then at 10 a.m. London time we have the German ZEW survey. At 1:30 p.m. UK time, the US Empire State Manufacturing Survey, which interestingly coincided this month with Trump's announcement and postponement, I should say, of tariffs on Canada and Mexico, so that could weigh on sentiment. Then at 1:30 p.m. London time we have Canada CPI, and then we also have, as I say, Fed speak from the Fed's Bar and Daily, after we've heard, of course, from Waller saying that he is looking to pause rate cuts until inflation fades, but if inflation behaves as it did in 2024, then maybe they can get back to cutting at some point this year.
It's fascinating that cuts are still on the table. We're talking about inflation risk, and a little bit of a market narrative about should hikes be on the table if we're talking about tariffs. Cuts still very much priced in this market. It's not just in the Federal Reserve, it's in the Reserve Bank of Australia as well.
They really didn't want to cut. They went with a cut. It was a hawkish cut. They went with a cut, but they felt, it seems like, the takeaway was they're very uncomfortable going through the cut because the labour market in Australia is very tight. House prices are very high. So they've cut for the first time in 4 years to 4.1% by 25 basis points as expected. But the commentary after that decision has been taken as hawkish.
Yeah, Governor Michelle Bullock basically saying, don't think we're going to do it again, or don't take for granted that we'll do it again. So, as you say, a hawkish cut, but a nice shot in the arm for the Prime Minister.
It's just the fact that she's even commenting on what the next meeting is going to be like. Can you imagine if Lagarde or if Jay Powell did that don't worry about today, this is what's going to happen tomorrow. I mean, it's just a very clear messaging story that I think we haven't seen from bankers around the world.
Well, I mean, Christine Lagarde made that mistake in the first half of last year, so she's learned not to do that, but maybe Michelle Bullock can take a leaf out of Christine Lagarde's book now.
Here's what else you need to know this morning then. Yes, the conundrum, of course, for central bankers globally. At least 15 people, switching focus right now, at least 15 people have been injured after a Delta plane flipped and came to rest upside down after landing in Toronto. The plane, flying in from Minneapolis, had 76 passengers and 4 crew on board. According to local paramedic services, 3 passengers are in critical, non-life-threatening condition, while the other 12 sustained mild to moderate injuries. It's reported that Honda is willing to resume takeover talks if Nissan's CEO steps down. According to the Financial Times, Honda would be prepared to revive negotiations under a new Nissan boss who can better manage internal opposition. And the world's biggest miner, BHP, has reported a slump of 23% in first-half profit and trimmed its interim dividend to an 8-year low. Despite the profit slump, CEO Mike Henry remains optimistic about demand for BHP's products, citing early signs of recovery in China and strong growth in India.
It's a fascinating one because, look, they're also talking about a dividend cut as a function of that, talking about that China weakness as well. What is the reaction function? I think you're kind of the expert on this, the reaction function between this China stimulus and almost moment in the sun that they're having and how that shows up in some of the equity stories, specifically the mining stocks here in Europe.
He talked optimistically about the demand for copper, but to your point around China, when do fortunes for BHP and other miners on iron ore turn around, it's linked to the real estate market, and you have not seen any evidence that the measures put into place so far by policymakers in Beijing have really put a floor under the property market. The woes continue, the price drops continue, the challenges around some of the biggest property developers and real estate developers continue, with some bailouts of some. So until you draw a line under the property market, then that demand, arguably, for iron ore is not going to be there in a sustained basis. Though Mike Henry's saying he's starting to see green shoots, and that's where you saw a little move higher on iron ore prices today.
Yeah, because you're getting mixed signals out of China. So on the one hand, you've got this profit slump from BHP, the warnings about China. We've had this big take on Wall Street's retreat from China. But then also you had Goldman uprating the MSCI China index. You have the optimism around Chinese tech with the Jack Ma and Xi Jinping meeting. How are you meant to balance that, Tom? Given
well, I think you can de-link tech and AI enthusiasm and support for companies like Alibaba from the real estate market. Yes, about 30%. 20-30% of overall GDP in China comes from property, with all the other subsidiary impacts of the real estate market. So you can't completely de-link it, but what's happening in terms of AI innovation and the fact that valuations are still relatively low, despite Alibaba, for example, up 40% year to date, there is still an opportunity, would be the argument for those analysts, to get involved in an unloved Chinese tech sector that is now getting backing from President Xi Jinping, that is now coming through with real innovations. I think to that extent, you can de-link the two.
The case for China is similar to the case for Europe, in that the valuations are extremely low. Ultimately, you are looking at your leaders for that backing, whether it's defense spending, whether it's budgets, or whether it is, of course, the backing in the tech sector. We're going to continue that conversation on the show. Coming up, Hong Kong's tech index rallies, as we were just discussing, amid the Chinese president's continued support for the sector. We're going to dive into the nitty-gritty and the details there. Plus, we'll check in on IHG shares at the open after the hotel group's profit missed today. But up next, as we were discussing, European defense spending comes first. Those talks impacting both stocks and bonds on the continent. We're going to dive into the details. If you have any questions of your own for our guests or for us, dive into the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg. We're just over 40 minutes away from the opening trade across Europe. Your futures picture looks like this. You are seeing the Stoxx Europe futures kind of unchanged at the moment. Marginal gains in the FTSE at the moment. But I think what's interesting here is you were looking at some outperformance of the CAC futures higher by 0.3%. DAX futures higher by 0.3%. The CAC Caron is your underperformer, though. Is that a continuation of the defense story, perhaps a little bit of confidence in the leadership in Europe, dare I say? Let's see what else is under the hood. Of course, European bonds slipping and shares in those defense companies rallying yesterday on the likelihood of greater military spending. Let's bring in Bloomberg's Valerie Teitel for more. Valerie, is this sustainable?
Look, that is the question many are thinking out there in the market, Kriti. This European equity rally really taken 2025 by storm. The Euro Stoxx 50 futures powered again to a record close. We waited 25 years for a record close for the Euro Stoxx 600, and we got two in the last three sessions. A lot of this optimism driven by the boost in industrials. It's those defense names leading the rally. Flip on, we can just check how the year-to-date performance of that sector has been, because defense broadly has risen over 22% since the beginning of the year. Rheinmetall really being the outperformer, gained 14% yesterday, Kriti, and is now nearly 55% gain year to date. So defense stocks are taking this extra defense spending as a positive. But on the flip side, European bonds taking it as a negative, with this entailing perhaps a further bond supply, further debt issuance from nations across Europe. We're also seeing another slip in bond futures this morning, so we're set for another rise in European yields. You have to take this, though, Kriti, with the guys that we've had many sovereign debt syndications of late that were taken down with record demand. So the expectation out there is that this increased bond supply to fund that defense spending could be taken down quite easily by the market.
Certainly something we're going to be keeping a very, very close eye on, whether that kind of outperformance does actually continue. Bloomberg's Valerie Teitel walking us through the markets there and maybe setting us up for what we might see at the opening trade. Joining us now for more on those markets, Flavio Carpenzano, investment director over at Capital Group, joins us this morning. Flavio, we are seeing Europe have a moment in the sun, in the equity market, in the bond market as well. Good morning. How sustainable is that in your point of view?
Yeah, first of all, good morning. Thank you very much for inviting me. Actually, we expected this one to come from a growth perspective, and from the outlook on European fixed income market was relatively negative from the perspective. We expected more fiscal spending coming in Europe through defense, but even Germany we expect probably to increase the fiscal spending. And so overall, this remains negative for bonds, government bonds, in the long end. On the other hand, and I think that's the key point, is on the growth side. This fiscal support is going to support growth, and so ultimately might create a headache probably for the ECB in the cutting cycle. We are in a situation where the market probably priced too much gloomy economy in Europe, and we start to see signs of stabilization, particularly also coming from a fiscal spending. And on the other hand, they were probably too positive on the development, on the inflation in Europe, thinking that it was going to decline sharply. Actually, we are a little bit more negative there and think European inflation is going to be stickier, partly because growth is resilient. But then in general, you see wages are sticky, the service inflation remains sticky, you have energy price increasing, and the weaker Europe is negative for inflation. So ultimately, this might pose a problem for the ECB, and that's why we don't think the ECB is going to cut so fast as the market expected, below 2%. And the recent story on defense probably goes into that direction because growth is going to be resilient.
Yeah.
Having said that, fixed income market offers a lot of opportunity outside in Europe, in the US, for example, or in credit markets.
Well, let's talk about that fixed income market specifically in Germany. You talk about that weak growth, that elements of kind of stagflation there. We have an election coming up in just a couple of days, one that may ultimately result in, not imminently, but ultimately result in the removal of the debt brake. How does that show up in the bond markets?
Well, you started to see that. You start to see more pressure in the bond market because the market started to imply more spending and so more pressure in the long-term yield. And that's why usually we prefer underweight that part of the curve, the 10-year part, in Europe government in general, because you will see more supply. Again, I would stress the fact that this is positive for growth. This concept of divergency between Europe and the US probably already play out quite well. And now you might start to see more convergence between the two, where the Europe reached the bottom, and probably Germany is going to have more a pragmatic approach with public debt. GDP is relatively low, so they have a lot of margin for fiscal space and increased spending. again, the government market is taking it bad, but for the right reason.
Flavio, I want to pick up on your point that the ECB won't cut as much as the market expects. What about tariffs? I mean, is it that you think that Scott Bessent's eye on the 10-year yield and inflation is going to keep a check on balance on Trump's tariff policy? Or what is it that's making you not so worried about the Trump tariff impact on European growth that they're not going to cut so much?
Yeah, well, if you think about the impact of tariff, it is interesting. It's very difficult to estimate for two reasons. Trump and the U.S. administration is quite unpredictable on that one. But then also, even when you know about tariff, it's difficult to understand how it fits through the economy, how Europe will react. It seems they are quite unified on that, how companies will react, how they make it through the consumer price. So there is a lot of uncertainty from that perspective. You might think that in general, tariffs tend to be stagflationary. So they have an impact negative on growth and more on inflation. Now, if you look in the past, for example, in the US, the previous tariff policy impact was relatively stagflationary. The Fed focused first on the inflationary part, but then switched into the growth impact. Now, when you look at Europe, you might see the first impact will be on inflation. And that's why this might limit the ability of the ECB to cut rates so rapidly. I find it quite strange when you look at what the market is pricing today. You have the US pricing basically real rates at 2%. And then you look at Europe and pricing real rates basically negative. So this divergence probably is not sustainable, and the truth will be between the two parts.
Flavio, I just want to put a pin in your relative optimism when it comes to Europe. We don't hear it very often. So we could start, Europe is at a bottom, we could start to see a turnaround. The fiscal response could be there from Germany and others. How do you play, what is the equity strategy for an improving European economy?
Well, of course, you will have an impact on the equity market and the European side. So, of course, you will see the acceleration on the European equity at the moment.
What record highs already? There's further to go for European stocks. How much further?
Well, unfortunately, I'm not an expert on the equity side, okay. So that's why for me it's more on the bond side. That's where we are probably less constructive. I think what I would say in general for the equity and fixed income, and I think that's the key point today. I think we are in an environment where you have central banks overall easing monetary policy, probably at a slower pace than we expected, but still cutting rates in a non-recessionary environment. This is supportive for, in general, investment, equity and fixed income, and that's why it's important to get out of cash. And that's why also we recently published our capital market assumption that basically look at the potential expected total return for equity and fixed income over the next 20 years, basically. And what is interesting when you look at fixed income, the next 20 years, they look much brighter than the previous 20 years. The capital market assumption expects for fixed income to return mid-single digit total return over the long term, and this is quite attractive for the fixed income. So fixed income is back. It provides income and diversification from equity.
We're going to have to see how your relative optimism actually holds up. Flavio, pleasure to have you on the program. Flavio Carpenzano, Investor Director over at Capital Group, joining the program. We thank you so much. Coming up on the program, we're going to continue to talk about the UK. UK pay growth hitting the highest level in 8 months. We're going to discuss the latest data next. Stick with us. This is Bloomberg.
Welcome back. We are 30 minutes away from the Open. We're bringing you live shots. We're hoping to bring you live shots from Riyadh, where a meeting is about to start between US Secretary of State Marco Rubio, his team, and the Russian Foreign Minister Lavrov. We did have those live pictures. We saw both men sitting opposite each other with their teams. So those talks about a potential ceasefire, a potential peace deal between Russia and Ukraine, starting in Riyadh, of course, consequentially, without the Europeans at the table and without, of course, the Ukrainians at the table as well. We'll keep across that story for you. On the futures story, let's get back to the markets then, and the geopolitics are still front and centre. European futures currently pointing to modest gains of 0.1% after fresh record highs yesterday. The focus really on the US after coming back to a trading session after the holiday of yesterday. S&P futures pointing to the gains of 0.4%, so setting yourself up for a decent session stateside. Over in France, the CAC current is currently flat. On the bond markets, we have seen, of course, yields higher in the sovereign debt of Europe on expectations there'll have to be an increase in spending on defence. That's lifted the defence stocks but put pressure on the long end, of course, of the bond curve. The 10-year in Germany currently seeing yields up 2 basis points at 2.51. A similar move over in France on the CAC 40, and over in Italy, 3.56 is what's been yielded on the Italian BTP 10-year.
So that's what's happening in the bond space. In terms of currencies, the pound has been pretty steady, actually, off the back of the latest pay growth, paring losses versus the dollar after numbers picked up for wage growth to the highest level, actually, in 8 months. Employment also rose unexpectedly, likely to cement caution among BOE officials over future rate cuts. We can get analysis now with Elizabeth Martin, senior UK economist over at HSBC. Good to talk to you, Liz. I wonder if you agree that, actually, these numbers, suggest further inflationary pressures that the Bank of England is going to have to deal with that maybe mean they're going to have to be cautious over future rate cuts?
Well, I think that is the explanation on the face of it, that the labour market, like the broader economy, is in a state of kind of stagflation. So the unemployment rate kind of unchanged, some weakening signals in terms of job creation. But at the same time, the price of labour is still going up. And actually, this latest kind of spike higher, which started in October, I think has taken a few of us by surprise, really. The labour market appeared to be weakening. And yet, as I say, the prices is going back up again. But the big question for the BOE and the policy direction and inflation is whether companies are able to pass that back on to their customers, of course.
Well, yeah, on that point, so we had this story on the terminal about the UK jobs market saying that actually there hasn't been this avalanche of job losses that CEOs were warning about after the October budget, that, you know, the tax hikes Rachel Reeves made were going to mean they were going to have to lay off all these staff. Yes, supermarkets have made some cuts, but we haven't seen this spike in redundancies. Do you think, Liz, that it's coming and it's delayed, or that it was just hyperbolic exaggeration from the CEOs?
Well, look, I'm sure companies weren't too happy about the additional taxes, and they've made their feelings known about that. It's possible that that doesn't get followed up with action. But I'd be cautious about saying it's, you know, that's it, it's done now, because really it's not just the additional tax. It's another sizable rise in the national living wage coming through. We've got legislation coming through in the Employment Bill of Rights at a time when the labour market is softening anyway, and you've got technological alternatives coming through, automation, AI, etc. So putting all those factors together, I do think we should be a bit cautious about the jobs outlook from here. But as you say, the evidence so far, if we look at the redundancy numbers, the potential redundancy numbers, is that, yes, it's been remarkably resilient.
Liz, traders are paring their bets on how far the BOE will go, expecting around 54 basis points of cuts now by the end of this year. Are they right to pair those bets? What is your expectation around the BOE response?
So we actually think as we move through the year, we will be a bit less worried about this kind of hump in inflation, as Catherine Mann on the MPC put it, driven by energy prices and what have you, and more worried about the economy, of course. We had the private sector in recession, as we found out at the end of last week. We do think we'll see some weaker signs from the jobs market. And actually, we think the BOE will be cutting by considerably more than that 54 basis points.
Considerably more being how many, Liz?
So
how far do they go?
So we think they carry on this kind of quarterly path for now. So they cut in May, they cut in August. But then at that point, I think, assuming we do see this weakening in the economy and the jobs market, we think they probably actually speed up and start to deliver more rate cuts from there. So we've got 325 by the end of this year.
Liz, walk us through the liquidity story of the BOE. One of the big concerns of this global bond market, as I'm sure you know, is the idea that right now you are flush with supply and likely to get more of it from a lot of these government bond issuers here in Europe. Is that a positive or a negative for the UK bond market?
So I think there's clearly a lot of supply coming through. And we've got the spring statement coming up, at which clearly either there's going to have to be more borrowing or there's going to have to be more measures coming through, tightening cuts or tax rises. So, you know, I think that the supply has been a major concern for the bond market through the start of this year. And that's, I guess, depends where your standpoint is, but, points to higher yields rather than lower.
On that point, Liz, I wonder, at the spring statement, when the OBR has judged whether Rachel Reeves has any headroom left, if she only promises to cut spending further down the line, is that going to satisfy the bond market, or would that just be seen as moving numbers around on a page, as some commentators have told us?
I think the bond market is a little bit nervy at the moment due to this supply situation, due to global uncertainty, due to inflation worries. And, we got a little taster of that in January, where UK bond yields moved quite sharply higher, largely on global factors. And in the wake of that episode, we did hear the Chancellor reassuring markets that she would take steps to make sure those fiscal targets are met. Now, there might be an option to say, don't worry, if the situation hasn't improved by August, we'll take steps then. But I think if she really wanted to reassure and send a very strong message, perhaps the market would prefer to see some concrete measures sooner rather than later. But of course, the problem is, if you're raising tax or you're cutting spending, the risk there is that you are going to slow growth even further as well. And, as I said, the private sector is in recession in the UK. The government is driving growth. And if then the government scales back its own spending, then that's further downside risks to GDP growth.
Liz, if the UK avoids having tariffs imposed on it, do we end up being potentially a beneficiary, something of a safe haven economy?
Well, that's in an ideal world, yes. We are outside of the EU. We set our own tariff policy. We're not a huge industrial economy, which means that we're not necessarily the biggest target. And if we can strike a balance between staying on side with the US and resetting relations with the EU, then I think, that does put the UK in a really good position. And that's something that would be great for us, because actually the export sector's been a bit weak as well. But of course, there's lots of pitfalls along the road there.
Liz, our reporters say that the Treasury has been asking non-protected government departments to look at 11% real terms cuts to public spending in order to make room for more defence spending. I wonder what you think that is going to do to the UK economy. Some people would say that that's a return to austerity.
Yeah, I think they would. I think it's actually quite sort of reminiscent, really, of the policy of the previous government, where you have, departments which are protected, which means that, if spending is going up for those departments, then it has to go down for everybody else. But the Chancellor doesn't have a lot of good options here. The fiscal room is incredibly tight. There is now this sort of sense of needing to spend more on defence. If growth disappoints, then we'll have to borrow a bit more or tighten a bit more as well. And so there's not a lot of good options. Is it cutting benefits? Is it cutting non-protected departmental spending? Is it raising taxes? None of those will be good for the economy.
Certainly something we're going to be keeping a very close eye on. Elizabeth Martin, senior UK economist over at HSBC, joining us on this day where, of course, we got that batch of UK data. I'm looking at cable right now, trading at about a 126.15 off of the data. Let's stick with the UK there. UK Prime Minister Keir Starmer yesterday urging President Trump to offer Ukraine security guarantees alongside Europe as part of a potential peace deal following a meeting of European leaders in Paris.
I'm prepared to consider committing British forces on the ground alongside others if there is a lasting peace agreement. But there must be a US backstop, because a US security guarantee is the only way to effectively deter Russia from attacking Ukraine again.
Keir Starmer there speaking and really kind of stepping up on the international stage in terms of saying, well, if the United States is not going to support the efforts in Ukraine, the UK absolutely will. Going as far as to offer things like boots on the ground, something that his European counterparts have said absolutely no to. We'll see, of course, how that holds up.
Yeah, is this the leverage that Keir Starmer is going for vis-à-vis the Trump administration? We're prepared to put boots on the ground. We know you are not, but we want your security backing nonetheless. And will that play out for him in light of the fact that he seems to have at least on some levels, a more constructive relationship with the Trump administration, certainly than some of his European allies.
Yes, but how far is this going to go? You know, 2.3% of GDP on defence is what's being spent at the moment. When are we going to get a deadline for the 2.5% spending on defence that he's talked about? And when are we going to get to the 5% that Donald Trump wants of NATO allies? It's easy to say, perhaps, that you would put boots on the ground, but that defence spending commitment in a fiscally constrained environment, much, much harder.
Yeah, absolutely. Something that I think all of his European counterparts are quite familiar with as well. This all comes as we talk about talks right now between the United States and Russia happening in Riyadh at the moment. We did get a brief glimpse of it. Of course, the camera's not really allowed in that room, but high-level officials from both sides discussing the future of Ukraine. I think the highest level talks have happened in 3 years' time, less than 100 days into Donald Trump's presidency. And also seeing a headline here across the Bloomberg terminal, this coming from EU Commissioner Marta Koss, of course, the Commissioner of Neighborhood and Enlargement, saying that they expect to open their very first Ukrainian and Moldovan accession talks, and that cluster happening in the first half of this year.
So if Ukraine cannot become a member of NATO, and the US has ruled that out effectively, then can they be brought into the European sphere and the European community that much more quickly? And this seems to be maybe a step in that direction. As you say, we got a little brief look into the room. The most senior leaders were Secretary of State Marco Rubio on the US side, of course, and Lavrov, of course, of the Russian side, the foreign minister, face-to-face in that very small room. What will they come out with? The concern, of course, many, is that Trump and the team from the US have already given up much of the leverage by committing not to having Ukraine in NATO and by committing not to having US troops on the ground. We'll see to what extent the detail comes out, whether or not the Trump administration can negotiate a deal that is palatable both to Ukraine and Europe. Coming up, the world's biggest miner. We're going to switch focus. We're going to focus on the mining space. Interestingly, of course, rare earths is part of the discussion when it comes to Ukraine and the Trump administration's call there for access to those rare earths. But on the mining front, with the corporate earnings in focus, we're going to speak to, and we have been speaking to, the CEO of BHP. That company posting a 23% drop in first half profit on lower Chinese demand. We break down the impact next. It's one of today's stocks to watch. Stay with us. This is Bloomberg.
We are about 15 minutes away from the opening trade. We are seeing futures in the green. You are seeing Euro Stoxx 50 futures higher by 0.1%. Outperformance, though, is in the DAX. And I think this is crucial here, higher by 0.3%. This is an element, Tom, Lizzy, that we saw yesterday as well. This outperformance in the DAX really driven by the defense sector. I'm curious that it's happening on a second day as well. You would think that when you have a massive outperformance like that, you would see some sort of retracement. I didn't quite see that.
Yeah, I mean, people I was speaking to yesterday were surprised that it even happened on day one. Double-digit growth for some of these stocks. Rheinmetall, SAAB, up over 10%. And yet, didn't we already know that at some stage Europe was going to have to boost its own defence spending under US pressure? Wasn't this the inevitable?
It's the breaking of the logjam potentially around the debt break in Germany. It's the breaking of the logjam potentially around joint debt issuance when it comes to defence spending that seems to have enlivened these markets. But in the context of the gains that we've seen, it is on some level surprising that you continue to see the upside. But if you do get a breakthrough and if the logjam is broken, then you can probably make the case there's going to be sustained upside. If you're looking at potentially 400 billion just in first takes in terms of the spend that is available for Europe from other funds they can dig into, 400 billion euros, and that's just for starters, then you can make the case that there is further cash to be put to work to these defence companies.
Yeah, absolutely. We should mention, though, as we're dealing with thought of investment and defence and geopolitics as well, we're getting the final readings of the French CPI story as well. And remember, these are the final readings, so we're not seeing much market reaction off of them. But it is worth noting that the consumer prices, the final reading coming in at about 1.7% year over year, the preliminary numbers coming at 1.4%. But I think the overarching picture here is not necessarily the economic story, the economic performance at the moment. It is ultimately the geopolitics. Let's see how that factors into the markets here. Joining us now, Markets Live executive editor Mark Cudmore joins the program. Mark, we keep talking about this peace dividend perhaps being a tailwind for European stocks, and already a moment where that has been fairly positive for this part of the region. How long does it last?
I think there's two parts here. I think the peace dividend one I'm a little bit worried about because it's not going to happen quickly. I think the idea of the fiscal spend that I think that you guys were discussing there is perhaps the more sustainable one. That's the one that's not been priced there. I think people have already priced in the idea that we might get resolution in Ukraine at some point this year. So that bit's probably already fully priced or excessively priced. But the idea that suddenly Europe takes off the fiscal handbrake, starts spending aggressively because defence spending counts as outside the budget limits, might be a real game changer for the continent. And that might provide a more sustainable tailwind for stocks and for the currency as well.
Mark, when you look at the Chinese space and the upside that's continuing to come through for tech stocks there, how sustainable do you think that is? The blessing of Xi Jinping for companies like Alibaba, is there more money to be put to work in Chinese tech stocks?
Very much so. The world is massively underexposed to the kind of changing narrative there in China, Hong Kong. On a very short-term basis, it does look like Hong Kong stocks, which you know are my preferred way of kind of expressing this, are looking probably a little bit stretched, especially with a lot of earnings this week. So we may get some consolidation for the next couple of weeks. But overall, these are very, very cheap stock markets, and they're discounted for false premises. They're discounted because the idea that the benefits of the AI productivity boom would only accrue to US software firms. Well, that is not the case. This will be a global productivity boom, and it'll benefit Chinese firms that are very, very strong in this software space as well. So I think that suddenly the discount that we're seeing in that sector is being removed. And at the same time, TINA, the idea that there's no alternative to US megacap tech stocks, is being undermined because of policy uncertainty around the new US administration, what they're going to do on tariffs, and that is undermining US businesses. So suddenly people are looking for another home outside the US, and Hong Kong will continue to be a sustainable beneficiary of that.
Just finally, Mark, if we're looking for a bull case for the euro, do we find it in the peace dividend? Do we find it in the German election?
I don't know if we find it necessarily in the German election, apart from maybe relief that we're not getting the worst case scenario right now. But I do think that, we're changing the narrative, that there might be a slightly more positive story in Europe. This is not a super bullish story. It's that we've been deeply pessimistic. The idea that European growth remains very negative. It's struck down by bureaucracy. But now we might get some spending, and we also might get the peace dividend as well. At the same time, the dollar is very overpriced, and suddenly some of the exorbitant privilege of the dollar are going to be eroded at the margin. It's not disappearing, it's staying the world's reserve currency, but all the reasons people are wrong the dollar are starting to be undermined. So I think this is a year where the dollar suffers and the euro will benefit as a result.
All right, our Bloomberg Markets Live Executive Editor Mark Cudmore. And remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLIV Go on your terminal. Now let's get to our stocks to watch. Joe Easton from our equities team has them for you.
Morning, Lizzie. So IHG giving a bit of a mixed update out of the hotel sector today. Their revenue per average room actually beating expectations, but the pre-tax profit actually declining. So therefore, we could potentially see a bit of a mixed open for that one. We can see the stock outperforming over the past year. Did have some strong reports last year, but actually there are now 8 analysts with sell ratings on that stock. So potentially we'll wait to see if they are pleased at the open of trading, if that pre-tax profit mix comes into play. Then in terms of miners, there's lots going on in that sector today. We've got numbers out of BHP. That one was slightly higher over in Australia, as Antofagasta here in the UK also beat on some key profit numbers. Glencore has an upgrade over at Morgan Stanley. We're going to watch Anglo American as well, because BHP on their earnings call was talking about how it's very difficult at the moment to do M&A, and that was previously a target for them, so potentially could see some negativity. But the one thing to note is we are seeing iron ore prices up significantly overnight, so that could boost the sector more broadly. Then in terms of analyst ratings, a big one out from Citi. They've double downgraded BT. They've gone from buyers to sellers, saying that they expect the revenue to decline at Openreach. That is the broadband business, of course, and they're also seeing some uncertainty around BT's general pricing as well. Now, that stock has been on a decent run, so potentially it's a bit of a valuation call, but I would expect BT shares to be lower in the telecom sector in London this morning.
Our equities reporter Joe Easton there walking us through some of the stocks to watch at the opening trade. Now, we did know that the equity market did actually rally. We are looking, of course, guys, at a peace story potentially between the United States and Russia. These conversations happening in Saudi Arabia at the moment as we speak between the likes of Marco Rubio and Sergio Lavrov. At the same time, we're getting a little bit of fallout from some of the European leaders from a mini summit with Emmanuel Macron yesterday in Paris as well. How does this all show up in the markets this morning? Is this simply a buy everything moment, a buy defense moment, or a retrace yesterday's move moment?
And the sell-off on sovereign debt is still there, but it's moderated. And so you're seeing yields up about 2 basis points, close to 3 basis points on the German benchmark 10-year Bund, currently at 251. We have a line crossing around the 10-year yield gap between Italy and Germany, and that is starting to contract, 105 basis points. Italian BTP is currently yielding 356. The expectation that there will have to be more spend, what that does to the budgets of European countries and whether or not they collectively go through with some of this spend is what is being considered by these bond markets.
Absolutely. Futures are actually higher at the moment, but marginally, the DAX, if we're looking for an outperformer, higher by 0.2%. Coming up, we're going to dive into the details. It is the opening trade. We are 5 minutes out. This is Bloomberg.
Just a few minutes to go until the opening trade. I'm not going to recap what happened stateside yesterday because nothing happened. It was President's Day, but we have got futures pointing higher on Wall Street. But if we look at the European futures, we have flat to the upside on Euro Stoxx 50 because we had another record session yesterday. Hard to beat that, but the outperformance set to come from Germany again because of the optimism about defence spending. We saw all of that boost to the likes of Rheinmetall and SAAB on this optimism. Does it last when we have these talks between the US and Russia happening in Saudi? But Tom, what are you watching in terms of individual names today?
So certainly the miners are going to be in focus. Iron ore prices are slightly higher. BHP came through with their earnings. It was a drop, of course, in terms of profits. They've cut the dividend. Concerns about demand out of China on iron ore. Though the CEO speaking to us did say he starts to see some green shoots in the housing market of China. So that could be consequential. He's also seeing pretty decent demand for copper. But it was a big drop in terms of profits for BHP, and we'll see what the read across is for the broader mining space. Iron ore, though, prices slightly higher in the session today. We're also looking at BT and IHG. The IHG story, the hotel group, of course, on a pre-tax level for the full year. They came out with a beat. Pre-tax full-year profits coming in slightly. In fact, I should say pre-tax profits slightly softer. Revenues also slightly softer. So it's a miss for Intercontinental on both pre-tax profit and revenue. So we watch that stock at the open. BT, this is a story of a downgrade at Citi, the telecoms company, of course, downgraded by Citi on a likely drop in the open reach revenue part of the business for BT. So three of the stocks we are watching, or three of the sectors at least we're watching, Kriti, so far this Tuesday morning.
I'll add another, and that, of course, is the defense sector. We've been talking about it all morning as we talk about the outperformance in Germany. You're seeing it in the futures picture. Does it show up then when we look at the opening trade? We should mention we are getting those numbers right now. We also have, of course, the UK data to keep an eye on as well, and how that factors in. Right now, flat on the FTSE 100 at the moment. Really not seeing a ton of action in terms of that movement. Does that change if we get a bid into the defense sector? The rest of these markets still shaking out a little bit. We're starting to get the IBEX show up higher by 0.2%. The Stoxx 600 getting some early cues, but the CAC Cameron, the DAX, even the SMI taking a minute to really process what this actually means. Maybe we can get some initial movers, especially when it comes to the FTSE 100. Lizzy, what are you seeing there?
Yeah, when we look at the breakdown of stocks across the Stoxx 600 in terms of sectors, you've got about 3/4 in positive territory. So basic resources, as you alluded to earlier, Tom, leading the gains this morning, higher 0.6%, followed shortly behind by industrial goods and services, also higher 0.6%. And then if you look at some of the individual defence names, they are in the green. We're waiting for Rheinmetall to open, but we do have SAAB up 2.7% this morning, Leonardo up 1.7%, BAE Systems at 1.5%. So again, the defence names eking out the gains on this expectation of more defence spending.
And you're getting more signals, aren't you, from European leaders? There is not consensus yet, but you're getting more signals from some, at least, that they are considering joint debt issuance to fund defence spending. We're still a long way from getting that across the line, but the signals seem to be that Europe is looking to act on this gap that is now being left by the US, with all the contingencies around, of course, what is happening in terms of the divisions around Europe. So the defence stocks are performing well again. In terms of some of the individual names, we called out BT, we called out ISG. ISG is currently down at 2.4% after a drop in its revenues and profits. BT currently down 4.3% after it's been downgraded by a number of analysts, including Citi. So we continue to watch some of those on the downside as well. But again, across the sector-by-sector basis, on the downside, you're seeing chemicals as a sector down the most so far in the session by 0.6%. Tech also taking a bit of a hit, just down modestly 0.2%. On the upside, it is industrials with defence within that mix, up close to 0.6%.
Yeah, and another repetition of yesterday's theme, banks up, the third best performing sector, higher 0.5%. Again, you've got the higher yields across the curve, and that benefiting the European banks this morning. So all of them on my screen in the green. You know, from just the most up this morning would be NatWest, but that ties in as well, perhaps, to the UK story. And you mentioned, Kriti, we had that jobs data at the top of the hour.
Yeah, absolutely. We are, of course, 30 seconds away from what we're expecting the DAX to open. That always takes a few moments to get there. In the meantime, though, I think it's interesting that we are seeing some of the energy names on the back foot this morning. I'm looking at Shell, I'm looking at Total, I'm looking at BP as well, all taking a step back. You would think, though, there's some sort of risk rally, some sort of peace dividend, even some of the green shoots in China that we're pointing to, the commodity picture would catch a little bit of a bid. I'm looking at oil prices, Brent at a 75 handle, and the stock market not really catching the drift, I will say, of the marginal gains in the commodity market as well. So that's going to be something that we are keeping a very, very close eye on, and specifically in terms of these peace talks that are currently happening right now, again, in Saudi Arabia between the United States and Russia, or at least senior officials from both sides. We also meant that the DAX is officially open, higher by about 0.2%. We're going to wait for some of the pricing to show up, but those defense stocks are certainly going to be crucial as we do that. And right off the bat, Rheinmetall higher by about 3%, almost like it was designed. Let's talk about how Goldman Sachs is viewing all of this. Strategists there raising their Stoxx 600 price targets on that ceasefire potential in Ukraine. The team showing their preference for their defense basket with the need for spending on the sector remaining fairly high in Europe. Let's bring in a friend of the show and a true expert in this area, Goldman Senior European Equity Strategist Sharon Bell, joining us around the table. Sharon, you picked an amazing day to join us because we've had 48 hours of this defense sector just flying, even the broader European indexes flying, despite us talking about no actual fiscal room for this kind of investment, and yet the sector is expecting that. How do you square the two?
Well, I mean, it is an amazing day, of course, but then there's been so many in the last few weeks, hasn't there? How do we square these two? And this is difficult. This is why the European leaders are meeting at the moment. They want to also work out how to square the fact that they don't have that much money to spend, and yet they need to spend quite clearly. The pressure is on. The US is likely to pull funding in some way or other out from Ukraine. Europe needs to make up the difference, needs to defend itself, needs to defend Europe. I think there's a few places it could come from. There is some room for some national governments, in particular, to spend a little bit more. Germany is the obvious one, if it moves the debt brake a little bit. But we've got the election at this weekend, which will somewhat decide that. And then you can maybe pool resources a bit better. The EU, Europe hasn't necessarily been good at coordinating, issuing, pooling resources. They did the recovery fund. They could perhaps, there's little bits of funding left for that, which they could maybe move towards defence. So you can move bits of money. You can parcel things together a little bit better. Some national governments can extend their spending. But in the end, they may also need to make cuts elsewhere.
But to be clear, Sharon, you have conviction in the defence stock rally that we're seeing. You think it has further to go. How much more upside is there?
It's done extremely well. And look, it was our best performing of all our subsector baskets. I mean, we might have 40 or 50 of these things.
So you want to take profit or are you going to put more in?
It was the best performing in 22, 23. I think it was one of the best in 24. And so far, year to date, it's been pretty much one of the best again. But, you know, in terms of valuation, it trades a bit expensive versus the market, but not expensive versus US defence stocks, for example. So, yeah, I think there's a little bit more to go here because Europe hasn't really yet committed the funds, spent the money. This is an industry which actually, to be honest with you, for many years has been on its knees until recently.
Sharon, you mentioned the German election and the importance of that in the defence spending story. But I do wonder, is the DAX going to fall off a cliff if we don't get the result that markets want?
Yeah, I don't think it's so much the DAX because the DAX is, I mean, dominated by a few companies which are super international. So the DAX is a reflection of kind of global expectations for growth picking up, and it's not just related to defence spend or fiscal spend or something like that. I do think this idea that maybe Europe could get a bit more energy supply if there's peace in Ukraine could be also helping Germany and the DAX because, of course, Germany's a super gas-dependent economy, like many others, a manufacturing economy, etc. But yes, I do agree there's some vulnerability there. This weekend we have the German election. It's somewhat on a knife edge, really, as to the absolute result and whether this will allow them to move the debt brake.
What is the market's preferred outcome?
I think the preferred outcome on the market is not so much the political mix perfectly. It's more that you get some more fiscal spend by Germany, whatever the political mix is. And there isn't a blocking minority that prevents that. So I think that is probably what the market is most focused on.
But that's still very much up in question, even with the Frederick Merz kind of being the conservative frontrunner at the moment, according to the polls. Even he has gone hot and cold on the idea of the removal of the debt brake. And even then, I'm curious what kind of timeline we're looking at for that investment story, even in defense, or the investment story in Germany to actually manifest.
So on the hot and cold, fine, he's gone hot and cold. But, the last few days, as you said, the last 48 hours have made it absolutely clear Europe needs to spend more on its defence, including Germany. But, yeah, look, I think in terms of whether there's sort of the mathematics within the Parliament to actually achieve this, that's still in question. That's still very, very much in the balance. And, yes, I do think that if you get a more messy situation with maybe a 3- or 4-way coalition or a clear blocking minority in the German Parliament, both of those things are a risk to performance, particularly given how well European names have done.
Yeah, it's fascinating because we are getting almost this optimism ahead of the actual event itself in the equity market. That might translate to something a little bit different in the other asset classes.
Yeah, and you could have all of this wrangling that goes on for weeks and weeks, whether you get the coalition, whether they can make the market-friendly reforms. But as you say, other asset classes impacted by this too. I'm thinking about the euro. And Sharon, I noted you were writing that a weaker euro would barely help European stocks. So how do you see... We were talking about this with Mark Cudmore. A peace for Ukraine affecting the euro. Does a stronger euro mean bad news for European stocks? How does it all factor in?
I think the ideal for European stocks is a flat euro, even slightly down over time, because perhaps the ECB is getting a little bit more aggressive on easing conditions. So a slightly weaker euro, but not one which is weakened because of some sovereign risk or some sovereign crisis or some bigger problem in Europe. So I think the reason you often find European stocks falling as the euro comes down is the euro is often coming down because things are not looking great in Europe. So I think a stable euro will probably be the more ideal.
But, sorry, on the ECB, we were just talking to Flavio Carpenzano earlier. He says that the ECB won't cut as much as the market expects. Do you agree with that?
We think the ECB will cut every meeting, basically, by a quarter point. And we think they need to because, although we're talking about Europe looking to spend a little bit more on growth, on its defence, etc., I think, that spending is going to take a little while to come through and hit economies. And at the moment, the pace of growth in Europe is really quite dire. So you've got weak economic growth and you've got inflation coming down as well. So inflation coming down, relatively weak economic growth. We think the ECB level of interest rates is still... tightening, really, and we would expect a quarter-point cut every meeting.
But the elephant in the room, surely, tariffs.
Yeah, absolutely. How does that factor in? How does that spending story show up?
Yeah, I mean, this is the other risk for Europe as well. And I think that, going into this year, we were more concerned about tariffs. We do still expect more tariffs on Europe. We expect the US to do a tariff on critical imports. And Europe... Actually, a lot of its exports to the US would be under that category, let's put it that way. We also expect the US to do tariffs on EU autos as well. So, European autos plus these critical imports. Now, we also know that Trump is certainly using a lot of these tariffs as a way to try and get concessions out of regions. And Europe spending more on defence again would be a way of mollifying Trump. So I think it all comes back to Europe does need to get its act together in financing and spending defence.
It's interesting because doesn't the defence sector, one, doesn't a lot of it come from American players? And two, isn't it also subject to tariffs? How does that work?
Yeah, so I do think that we find at the moment European governments, when they spend on defence, about 70 to 80% of that spending leaks out of Europe, and a lot of it goes towards spending on US defence companies. In a way that, again, this just shows that you need to invest more in your own defence industry. But, on one of your earlier questions, it will take a long time. There are defence companies in Europe, but they're not of sufficient size not to supply all Europe's defence needs if Europe has got to make up the whole for US spending in Ukraine and elsewhere. So Europe does need to build up its industry too over time.
Sharon, before we let you go, where does the UK and where do UK equities fit into this thesis?
Yeah, look, I think the UK is probably less at risk of tariffs, just because it's less of a manufacturing economy than Germany or elsewhere. So less at risk of tariffs, does also need to spend more on defence. I mean, the UK has been spending close to 2% of GDP on defence for some time, but not the 2.5%. That people are talking about now. So there needs to be a bit more spending on defence. Keir Starmer has mentioned this as well. But there isn't much budget for it, is there? So there needs to be some movement on some of that too in the case of the UK, and maybe cuts in spending elsewhere, maybe some increases in taxes. That's going to be really difficult for UK domestic stocks, FTSE 250 to stomach. On the other hand, all this good news about a bit more spending, peace in Ukraine, maybe lower gas prices ultimately. And I mentioned Germany as a very gas-dependent economy. The UK households in particular, super gas-dependent. So if ultimately prices come down, that will be fantastic news. Lower costs, lower inflation. Maybe it will allow the Bank of England more room to cut as well.
OK, Sharon Bell, excellent, as always, of course, with the analysis across these European and UK markets. Sharon Bell, Senior European Equity Strategist, of course, at Goldman Sachs. Kriti, looking at the core six.
Yeah, absolutely. I'm putting my Guy Johnson tie on, maybe, if that's how we put it. When you look at the core six, I would say one major company that's on the back foot this morning, and that, of course, is Novo Nordisk. You are seeing healthcare as a whole, as a sector, take a little bit of a breather, especially when it comes to having some sort of foothold in this rally. Schneider Electric, though, flying off the rails here, higher by 0.8%. That AI trade showing up. But Schneider Electric, I was reading, also has a little bit of defense exposure as well. So I wonder how much of that shows up there. ASML is taking the exact opposite, trade down about 0.2%. I wonder how much of that is related to the China investment story around tech as well. Nestle higher by 0.3%. And LVMH, so that consumer goods story, if you can call LVMH a consumer good, is actually in the green, barely. And Ferrari zooming away, higher by 0.6%. Let's get a check on some more of the individual stocks. Joe Easton has that for us. Joe.
So one stock not having a good day is Capgemini over in Paris this morning. The stock down around 7%. This is the French software firm. Weakness in its earnings report. Now, this seems to be tied to the auto industry, so they've got a lot of exposure to the French automakers. An analyst today saying that this is the reason for softness in their results. Potentially those tariffs that Sharon was discussing there won't be a positive thing for that company either. Then in the miners, a lot going on there today. BHP, of course, slipping. Now, mostly that is traded in Australia, but we do have a London listing that's coming down following those weaker results. Anglo American, meanwhile, in focus, given BHP previously a bidder for that one. Anto beat expectations here in London, and Glencore upgraded at Morgan Stanley. A lot keeping us busy. As I say, a little bit too much to keep track of on that sector this morning. Then in terms of hotels, IHG, that was down around 3 or 4% at the open. It's coming up a little bit at the moment. The pre-tax profit has declined, as Tom was discussing earlier. The revenue per average room, the one number we all look out for, that does actually look pretty strong for that one in terms of the revenue numbers there, but that isn't making up for that drop in pre-tax profit. So that's weighing on the stock here in London today. Then another one a little bit niche. We're down in the food vouchers, the French food vouchers and employee meal vouchers. Now, this stock has had a rough run as the government is clamping down on that industry over in France, and the earnings were potentially expected to spur a bit of a rebound, but we haven't seen that. So Edenred coming down in Paris today. Then I'm feeling very pleased with myself because I called BT potentially lower, and that one is having its worst day since August, or at least on track if that decline holds. It's down 5%. BT double downgraded at Citi as they expect Openreach revenue to drop at the UK telcos firm. So that one really hit today. And the other broker move to keep an eye on, BASF over in Germany. This one declining as well. Berenberg cuts it. The stock's had a good run as falling gas prices feeds through into the chemicals as a positive, but they think the rally's gone too far and they downgrade BASF today and that one is down 1.7% on the Frankfurt Exchange this morning.
Joe, I'll let you away with patting yourself on the head. We all need to do that sometime. Joe Easton from our equities team, we thank you. And we're going to pick up on the mining theme next. Mining giant, as you mentioned, BHP posting a 23% drop in first half profit on lower sales from China. We'll discuss why CEO Mike Henry is still optimistic about the demand picture next. This is Bloomberg.
The sectors of the economy that are important to BHP's commodity demand, for the most part, have been performing strongly. The exception, of course, is the property sector. That has been under some pressure, but we're starting to see some green shoots there by way of increased new starts, property price rises in some sectors. So I think we'll see some momentum building into 2026.
So that was the BHP CEO Mike Henry there speaking to Bloomberg after the mining giant reported a slump of 23% in the first half profit and trimmed its interim dividend to an 8-year low. Iron ore, I should note, gaining this morning. This as BHP's CEO says that he's seeing tentative signs of recovery in the Chinese housing market. We can get more now with our Bloomberg commodities reporter, Martin Ritchie. Martin, interesting that a lot of the hit to profit comes down to China weakness, and yet the CEO there quite positive about the outlook for China. What about the tariff threat? How does that factor in to this outlook from BHP?
Yeah, I think a lot of people might sort of raise their eyebrows a little bit at that outlook from the BHP CEO on, especially on China's property market. I think it's well understood now in the iron ore and steel markets that demand for steel in China has plateaued, is now falling after many, many years of rapid demand growth. What he's saying is simply that the kind of years-long property crisis we've seen is starting to ease a little bit. He points to some very tentative bits of data that are, I guess, positive for BHP. But the bigger story, and he's recognised this himself, is that at BHP and other big iron ore miners have to pivot to other materials. So one of the things I would note from the results today that BHP is now getting 44% of its revenue. That's a very big chunk from copper, which is obviously the metal that all of the miners, including BHP, are trying to get into.
Martin, BHP is no stranger to potential talks around M&A. What did Mike Henry have to say about that?
Yeah, obviously he's now ready for questions on M&A whenever he appears in public now, since that big bid for Anglo-American PLC last year that ultimately didn't go through. That would have been a huge transformative deal for the company and for the mining industry. So what he said today was, look, we don't need large-scale M&A to keep growing. We have plenty of projects in the pipeline, especially in copper, which I've just mentioned. He just said mergers and acquisitions are just one thing in our toolbox. We're very happy with the way that we've been growing ourselves so far. That said, I think it's fair to say there's a lot of drumbeats still about acquisitions for copper and in the mining space. We've seen Anglo just today sell its nickel business in Brazil to a Chinese company for $500 million, or up to $500 million. So that kind of topic of M&As just still going to bubble through, and wouldn't be surprised to see something more from BHP this year.
We look forward to seeing what that actually looks like. Bloomberg's Martin Ritchie joining us out of Singapore to cover the BHP story. We thank you so much, Tom.
OK, from China's old economy to the new economy, because Chinese President Xi Jinping has met with prominent entrepreneurs, including Alibaba's Jack Ma. The meeting signalling that Beijing's endorsement of the private sector is now pushing ahead. Key, of course, to reviving the world's second largest economy. For more, let's bring in Matt Bloxham from Bloomberg Intelligence with a particular lens, of course, on technology. What policy promises, if any, Matt, came through from the meeting? How consequential could this be for Chinese tech?
Yeah, hi there. I mean, I don't think we saw too many specific promises, but clearly there's a very big shift here away from the kind of property market, which you've been hearing about, not doing so well, and tech being really the kind of future of the Chinese economy, already contributing about 15% of GDP, and it's a great significance that the private sector leaders there were heavily dominated by the tech sector. You mentioned Alibaba, but also BYD. Leaders were there, DeepSeek, and a robotics startup. So, I think we've been through a significant period of kind of regulatory tightening, which really affected Alibaba. And I think the sense now is that period is coming to a close, and that there'll be a lot more freedom, flexibility for the tech giants to kind of really flex their muscles, both within China and on the global stage.
And meanwhile, Matt, we've had Elon Musk's AI startup XAI showing off its updated Grok 3 model. It was said by Musk to be the smartest AI on Earth. You'll give us the objective view. Does it live up to the hype?
Yeah, I mean, we're literally a couple of hours into the launch of this, so I think people are still kind of getting their heads around it. I mean, certainly from some of the stuff they demonstrated and from what Elon Musk said over the last week or so, it matches other leading models like ChatGPT and DeepSeek on various factors, and is ahead of them on others. I think I kind of see this just as the kind of the latest salvo in what's a rapidly evolving space, and that there are more developments coming from Meta, from OpenAI and ChatGPT. So I think that the AI arms race is kind of really approaching its peak.
Okay, Matt Bloxham from Bloomberg Intelligence, we thank you with that latest release from XAI.
It's really interesting when we're talking about the power of tech on the world's second largest economy. Meanwhile, the world's third largest economy is still kind of playing a little bit of catch up on the tech front. Can say the German election in just a couple of days actually changed that dynamic.
There is an effort underway. General Catalyst, one of the big VCs, has suggested you could take Germany's industrial base and layer on top digital infrastructure and radically improve productivity, efficiency gains, and the ability for Germany to catch up. That's something General Catalyst is looking at. They have to have the money to put to play. They're raising funds. It's a massive effort. That catch-up is needed.
The money, the skills, the electricity, the grids, the labor, the deregulation.
There's a long list.
Germany has a lot that they have to digest on their plate. We'll see, of course, if they're able to get there. Coming up, we're going to dive into all of those dynamics. We speak to Guntram, Wolff, senior fellow at the Brussels-based economic think tank Bruegel, on all of those topics. We're going to discuss that German election story on that laundry list I just added. European defense wasn't on there, but don't worry, they're intricately related to the AI story. We're going to dive into all the details. That conversation next. This is Bloomberg.
There was agreement and unanimity that a significant increase in defense spending is absolutely necessary, and there is no need to get irritated if an American ally says, spend more, be stronger, and more resilient, because those words are definitely justified by facts.
It
is completely premature and completely the wrong time to have this discussion now. I'm even a little irritated by these debates, I have to say. This is highly inappropriate, to put it bluntly and honestly.
German Chancellor Olaf Scholz and Polish Prime Minister Donald Tusk there speaking after Emmanuel Macron's summit in Paris on Ukraine security. Now, Bloomberg has learned that discussions are gathering pace in the European Union on how to increase defense spending. Joint financing now becoming a more realistic option for many of its leaders. Let's bring in Bloomberg's Paris Bureau Chief Alan Katz, who I'm sure is feeling like he's drinking out of a fire hose. Alan, we appreciate your time this morning. This conversation, of course, comes in the context of conversations happening in Riyadh at the moment between the United States and Russia, the senior officials there. What is the European reaction function as those conversations happen right as we speak?
So the Europeans are trying to put sort of a common face, speak with one voice in reaction to Donald Trump and his very aggressive stance on the Ukraine negotiations, and they haven't quite managed to do that. As you pointed out, there's some agreement on raising defense spending across Europe. The question is exactly how that happens. Does it happen on a pan-European level? Does each country contribute or not? And what are the mechanisms for it? As we said, there are some movement toward that, but definitely not agreement yet. There's also some disagreement on the possibility of sending peacekeeping troops to Ukraine afterwards with the UK. Keir Starmer was at this meeting last night as well. Being for it, and France has been for that for some time, but Poland is against that. So they are still having trouble with this idea of trying to really speak with one voice. And again, it's one of the issues that Europe has always had. Especially when you have now the United States moving very quickly on this. Europe has always struggled to be rapid in its response, especially rapid in coming to agreement, and that's showing itself again here.
I mean, I think it's almost a bit of a wake-up call for all of us watching this, that this is maybe the fastest Europe has ever reacted. Bloomberg's Paris Bureau Chief Alan Katz walking us through some of those details. We thank you so much. And Lizzy, we heard him there describe this issue of this kind of schism that's really forming between France and some of the other allies. Of course, we know other reports have suggested that things like getting peacekeeping forces in Ukraine is getting some stiff pushback from everywhere besides the UK.
Yeah, certainly, including Poland, who say, you know, we need to defend ourselves before we can defend anybody else. But interesting, Tom, you were speaking to a Lithuanian minister yesterday who was perfectly happy for Denmark to speak on their behalf, and Denmark perhaps aligning more with the position of the UK in that meeting. Did we get more disagreement than agreement coming out of Paris yesterday? But of course, the Ukraine war really looming large over the German election campaign as Europe's biggest economy heads to the polls on Sunday. Defence policy becoming a key dividing line, of course, between the current Chancellor, Olaf Scholz, and the frontrunner, Friedrich Merz of the CDU. And we can get more now from Bloomberg's Oliver Crook, who joins us from Berlin. Ollie, do you want to just take us through how the two men differ when it comes to their policy on Ukraine and what impact that could have after the election?
Yeah, we should say that both of them are in very strong support of Ukraine, and despite the fact that sort of Olaf Scholz has been resistant to send some of the more far-reaching arms like the Taurus missiles that could strike within Russia, really his focus, the one wanting to not escalate the war. Germany has been the largest contributor after the United States financially to Ukraine since the war began. But again, Olaf Scholz has been sort of more on the dovish side in terms of presenting certain military kit. He's also, though, however, been more on the dovish side of the fiscal side of the German story, really advocating for a workaround for the debt break, setting up that special 100 billion euro fund to top up the military here in Germany. Though I spoke to the highest-ranking German general in the military last week, and he called that 100 billion euro fund basically just filling the potholes of what is needed for the German military. So that sort of illustrates the scale. On the other hand, you have Friedrich Merz, who is much more hawkish both on the military side but also on the fiscal side. So on the one hand, he's more potentially willing to send some of these arms to the Ukrainians to support them. He's been advocating this for a long time. But again, he is going to be a strong sort of sticking to the debt break and not wanting to raise excessive funds. Will that change now with the Trump administration? But I will say one more thing, though, for Friedrich Merz, who is the likely next chancellor, if you go by the polls that we have today, there is a bigger job opening in Europe than just the chancellor of Germany. It is the leader of Europe. There is nobody that is filling that role right now. Emmanuel Macron has tried to be that sort of man of destiny of Europe. He has not really succeeded as of now, particularly since he is so weakened politically. But with a fresh mandate for Europe's biggest economy, could Friedrich Merz step in at this moment when you need a really strong leadership within Europe and potentially take a sort of proactive line on things like joint spending and to really sort of craft Europe as a stronger sort of union, particularly standing up against the Trump administration? That will be his opportunity. Whether or not he grasps it, we'll have to see.
Ollie, given the poll gains that have come through for the far-right AfD and the fact that the Trump administration is effectively playing footsie with this far-right group. They have been flirting with them, a group that has chapters that are detailed and described as extremists by Germany's own security services. What is the potential role of the AfD?
Yeah, so I think it's really interesting because we've talked about the Trump administration for a very long time, and their sort of policy towards Europe has been one of slightly more economic extraction, right? The idea of rebalancing the trade relationship in a way that is more fair, trying to signal that the basically trade imbalance would no longer be allowed, and basically trying to push a few other things. This speech by J.D. Vance over the weekend in Munich was not about sort of trade and economics. This was about exporting domestic political ideology within the United States to Europe. This is something that is relatively new from what we've been hearing from the Trump administration. And again, it's an interesting turn. He met with the leader of the AfD, Alice Weidel, Again, this is a thing that can cut both ways, right? On the one hand, it gives some legitimacy to what has been branded a far-right party that is basically ineligible to have any role in governing the country of Germany. That has been the position of the mainstream politicians. But on the other hand, I don't think anybody likes it when someone comes from another country and tells them how to vote and how to sort of present themselves in their own election. So again, these things have this sort of double-edged sword. I think what will be interesting is the degree to which this sows a bit of division within the EU. We know, for example, that the Hungarians have been very proactive in the campaign in the Trump administration. I knew people that would go to fundraisers in New York for the Republicans, and they would meet all of these sort of Hungarian people there that were sort of attending there and involved in these sort of in the lead up to the election, and they thought it was so strange. And again, this is something we've talked about to the Hungarian politicians. They have their own agenda within Europe, and that is pushing back against the sort of liberal order and what they call the sort of woke ideology of the European left. This is something that is going to continue to be a very sort of active discussion in European politics.
Yeah, what did the Hungarians describe this meeting in Paris as? They described it as a meeting as pro-war leaders, to your point. Oliver Crook, always with the latest out of Berlin in terms of the lead-up to that election, of course, on Sunday. The potential consequences not just for Germany, but Europe as well. Ollie, thank you. Let's get more details on this, more analysis, and bring in Guntram, Wolff, Senior Fellow at the Bruegel and former Director of the German Council on Foreign Relations. Guntram, given what you understand about the body politic of Germany, is there now a form of consensus that Germany needs to go much further and much faster than it has done previously in shoring up its own defence and the defence of Europe? How much conviction do you have that Germany will meet this moment?
Well, listen, Tom, I think the German debate has moved massively. If you think back 4 years ago, I mean, it was completely unthinkable, all the things that happened in the last 2.5 years. So there is really a big change in the population mood, but also in the political system. Germany is a major supporter of Ukraine, and it is, of course, also investing into its own defense. Yet it is very clear that what has been done so far is really inadequate. It's not enough. It's not enough to shore up Germany's own security, nor is it enough to really stand behind European security and at the extreme, stand up and be able to defend the European continent. So my view is the next German Chancellor, which is likely going to be Friedrich Merz, will have to step up, and I think he's ready, he has understood, and he was also in Munich, he listened to the speech of J.D. Vance, and I think he has become acutely aware of the fact that Germany cannot rely on the United States anymore. So Germany will have to step up, and Friedrich Merz is clearly pro-European, and he gave a major speech, foreign policy speech, a few weeks ago, in which he said, okay, the first thing I will do is I will reach out to France and to Poland on the same day, and I will actually fix the relation that has gone very bad under the current Chancellor, Olaf Scholz.
Will he act with the conviction, with the speed and with the decisiveness that many say is needed? And what will that look like, do you think, Guntram? What should be the policy priorities of the next Chancellor?
Well, so Friedrich Merz himself, I'm sure, will act fast, and I think he's acutely aware of the severity of the situation. He has a team around him that is really aware of what's going on. Yet, of course, he will not have an absolute majority, so he will have to form a coalition. And so a big question is, how strong will the other parties be, and what kind of coalition will he have to push through a bold agenda? I think what will have to be the agenda is an agenda of borrowing in the short term significant resources, both at the national level as well as the European level, to shore up our defensive capabilities. And I think we are talking here of numbers of easily, at the European level, 200 billion euros per year, I would say, for the next 5 years, in terms of really defense, additional spending on defense, which is going to have to be funded by deficits. So this is going to be a major boost to security in Europe. And it's also, by the way, going to be a boost for economic activity at a moment at which the US led a tariff war, and the tariffs and sanctions on the US will actually dampen European demand for industrial products.
Well, Guntram, you went right where I wanted to go, which is Germany, I feels like has almost a little bit of a hot and cold relationship with when it comes to providing the actual defense to Ukraine. And I think the missiles, the Taurus missiles were a great example of that debate. We're talking about investment in a big way. We're talking about this removal of the debt brake. Is there still fragmentation, though, internally within Germany on the approach of what should happen with Ukraine next?
Well, yes, definitely. So we have, I would say, a relatively hawkish frontrunner, Friedrich Merz. We have also a relatively hawkish Green political party that I think has, from the beginning, stood very strongly on the side of Ukraine. And then we have a much more hesitant Social Democratic Party, where I think the future of where they will go in their Russia policy has not yet been decided. There will be a vacuum if the election is lost, such as it looks in the polls at the moment. And the Social Democratic Party has certainly two strong factions, one wanting to sort of appease Moscow, the other one wanting to be strict on it. And last but not least, we have the far right, the Alternative für Deutschland, which is in fact fully in the camp of Moscow, right? And they are at the moment in the polls at around 20%. So that makes for actually quite a strong Moscow faction. And perhaps there will even be a far left party in the parliament, which is also probably more pro-Russian. So indeed, the majorities will not be easy to get together.
Well, Guntram, you talk about this idea, and I think now that you are, of course, having these talks between senior officials from the United States and Russia currently happening in Saudi Arabia, there is a question if this is the early signs of some sort of rehabilitation of Russia in the global economy. In that scenario, as near or far as that may happen, is Germany the front line of that conversation?
Well, I mean, it clearly is not. The conversation is happening between the United States and Russia. And if you ask me, it's a sign of the deterioration of the quality of the United States as a leader of the Western free world. I think a lot of Europeans look at this and wonder what is this U.S. administration going to want to do. Having a deal over the head of Ukraine and the Europeans is totally unacceptable. And that's why Germany and the European countries will have to pull their act together and actually step up and at the limit be ready to defend the European continent without the United States.
Well, Guntram, you talked about how the next German Chancellor adapting to geopolitics could actually boost the German economy. I wonder whether Germany should be pivoting from autos to defence, because surely that would please Donald Trump twice.
Well, I mean, yes, indeed. So at some level, that's a good strategy. I mean, certainly the car industry has been and has seen a decline in orders for a number of years now. And so there are actually industrial spare capacities. And yes, if Germany steps in with, say, an additional spending of 50, 60 billion per year, I mean, that will certainly give a boost to the defense industry. And that defense industry can draw on the manufacturing sector, on the industrial force of, in part, the car industry that at the moment runs below capacity. And indeed, that will mean less cars for exports and more tanks for domestic use.
And you talked about Merz's potential strength as a German Chancellor domestically. Oliver Crook, just before you, was talking about Merz having his eye on a role as leader of Europe. Ukraine's called for a special envoy to sit at the negotiating table alongside Donald Trump and Vladimir Putin when it comes to the end of the war in Ukraine. I wonder whether you think that Friedrich Merz has the minerals, has the clout to take on that role as leader of Europe.
Well, listen, historically, it's always been the case that Germany is too small to be the leader of all of Europe, but too big to be just any other European country. I think that's exactly the problem that Friedrich Merz will face. I mean, aside from all the questions about him personally, a German chancellor cannot automatically be the leader of Europe. So a German chancellor has to team up. He has to find the right coalition. He has to work with key European allies and the European institutions. And I think he's aware of that. And his foreign policy strategy is therefore very much focused on repairing the relations with France and Poland. And then, of course, acting in a European spirit. And in his foreign policy speech, in fact, recent foreign policy speech, he explicitly mentioned his history in which he was a member of the European Parliament. So he has a link to the European institutions. And he also mentioned that he is actually very much sees himself very much in the tradition of Helmut Kohl, the last, I would say, very pro-European German chancellor from the CDU before Angela Merkel.
Okay, Guntram, Wolff, Senior Fellow over at Bruegel, we thank you for your analysis. As we think about the end to the war in Ukraine being debated in Paris and in Saudi as well, those conversations continuing. We talked about a potential leader for Europe, but it's already Starmer and Macron seemingly vying for that job before the result of the German election even comes. And look, this problem for Europe is that they don't have a single person to sit at the table with those strong men from around the world. And the other problem is that Europe just moves so slowly compared to the US. And what a juxtaposition, really, with the rate of pay change that you've seen out of the White House so far.
Yeah, absolutely. And I think this is really fascinating because you are seeing that schism, as you point out, within Europe and then with the transatlantic alliance as well. You're also seeing it show up in the markets. And I think this is interesting. Take a look at what's happening with defense stocks here. They are flying as the broader market has completely turned around. They've paired those opening gains everywhere except for the European defense sector. Guy, when he's here around the table, likes to ask a lot of our guests what the European beta is to the United States. I'll introduce a different question. What is the DAX's beta to the FTSE 100 because of this defense exposure? Simply because we saw it outperform yesterday, and today we're seeing it underperform for the exact same reason.
Sharon Bell, Goldman Sachs, telling us she thinks there is further upside for defence stocks in Europe. And Chris Bryant has an opinion piece on the Bloomberg terminal right now showing that divergence. Germany has 300 battle tanks. Russia is producing 1,500 per year. Germany has ordered an additional number, 105 Leopard tanks. Congratulations, Germany. They won't arrive until 2030.
Yeah.
So you're talking about 300 battle tanks versus Russia with 1,500, which ties in to Sharon Bell's point, which is there is further to go in terms of the money that has to go into the defence space, and her argument that there's further upside for these defence stocks.
Isn't this so similar to the AI narrative, though? The idea that you're investing in AI, but then suddenly the outperformers in the trade is the AI adopters, it's the suppliers to the AI grid, it's et cetera. We haven't seen that second-level trade just yet. We're seeing it in the defence makers. We're not seeing it in the iron ore kind of suppliers, the aluminum suppliers, the energy suppliers involved in that trade.
Well, that's another question, isn't it? The primes, so those big defence contractors, have to adjust to what's happening in AI. And a German company called Helsing, which is fully backed and well-funded, is a company that's trying to build those kind of capabilities, those AI capabilities in defence. So do companies like Helsing start to play a greater role, and do they get adopted by the new German Chancellor and new German government? We're going to bring you all the news and analysis and market moves as we continue to build up to the German elections this week, including a special programme when polls close on February the 23rd. That will be live from Berlin. Coming up, top officials from Washington and Moscow are meeting in Saudi Arabia right now to discuss ending the war in Ukraine without any representatives from Kyiv or the EU. We bring you the latest. This is Bloomberg.
A meeting between top U.S. and Russian officials is underway in Saudi Arabia. The group is discussing how to end the war in Ukraine without anyone from Kyiv taking part, and as Europe struggles to respond to the rapid pace of events. Bloomberg Horizon's Middle East and Africa anchor Jumana Bersechi joins us now for more. Jumana, Just walk us through the details. We're not getting many headlines. We don't really even know much of the timing until recently. Why Saudi Arabia? Why now? And what's on the table?
Yeah, so many valid questions there, Kriti. I think it is really significant to point out that this is actually the first high-level, in-person meeting between Russian and U.S. officials since the beginning of the Ukraine war. And of course, it follows on from that 90-minute conversation that took place last week between President Trump and President Putin. Now, the Secretary of State, Marco Rubio, did say over the weekend that he will find out from these discussions whether or not Putin is serious about a truce deal with Ukraine. The Russian side, however, have framed it as an opportunity to re-engage with the U.S. once again. And they haven't specifically mentioned the war directly, perhaps hoping that this could lead to the first phase of a restoration or rehabilitation of Russia back on the international stage. But you're looking at images now. You had really senior representatives from the U.S., including the Secretary of State, Marco Rubio, also White House National Security Advisor Mike Waltz, the Middle East envoy Steve Witkoff, and on the Russian side, they were represented by the Foreign Minister Lavrov alongside a foreign aide. But who was not in that room? Well, you guessed it, Ukraine. President Zelensky. Nobody from Kyiv was present in the discussions that were taking place. Even though President Zelensky actually is in the Middle East region right now, he was in the UAE yesterday, he's in Turkey today. There are reports that he himself will be heading to Saudi Arabia tomorrow. So a really important step, but I think it also underlines the fact that Saudi Arabia is playing an increasingly impactful role in terms of its geopolitical weight, geopolitical clout on a global scale, because it has maintained this position of neutrality. They kept ties open with Russia throughout the last couple of years. And remember, Russia, an important part of OPEC+, they've had to coordinate on oil production policy. Equally, the Crown Prince MBS and President Trump have a very strong rapport. And there's even the possibility that these discussions could pave the way for that in-person discussion between President Trump and President Putin.
We'll see if we get there. Bloomberg's Jumana Bersetchi joining us out of Dubai to cover the latest coming out of the Middle East. And, of course, those high-level talks, as she said, the very first since the onset of the war in Ukraine. That does it for the opening trade. The markets are still moving. The Pulse is up next. I'm still here. We'll walk you through the headlines as they come through. Stick with us. This is Bloomberg.